Now let's talk about how to buy stocks correctly, because I want to go back to this right here. I had a conversation with an Armor Report subscriber, and maybe you're listening right now. I hope you are. She's from Canada. She gave me a call yesterday to talk about this stock right here and how to position it. So we have Armor Insiders, right? You guys are with me all day. We talk all day. You're in the Slack room, which is exclusive for you. And I was sharing with you at, I don't know if it was like somewhere around 7:30, 8 o'clock on election night, that I was loading up on Tesla when it became clear to me that Trump was going to win, which was around 7:30, 8 o'clock on election night. We loaded up on Tesla at $265 a share, roughly. 263, 265. And we were loading up on Bitcoin, somewhere around 72, 73,000. Okay. And she calls me yesterday at the end of the day because she's not an Armor Insider. She's an Armor Report subscriber, and you guys have access to this morning meeting, and you have access to call me for some one-on-one chat if you need a sounding board. And so what she says is, I can't be in the room all day. I've got a day job. I watch your morning meetings. And this morning you said you owned Tesla, so I went out and bought it at 285. I said, maybe I didn't make myself clear. We're not buying Tesla at 285. We paid 265 for it. So if I always say you have to be the risk manager of your own portfolio, you have to be the smart money and execute your strategy. And I'll use this hackneyed phrase, this is not investment advice, right? This is how I run my money. If I'm buying something at 265 and it's 285, you can go do that if you want, but that's got nothing to do with how I'm running money. So I'm really glad you called, because it gives me a chance to have this conversation with you and everybody else. If you're going to join me on an investment because it meets your risk tolerance and your goal and you want to do that, you got to look at the price I'm paying. And if you're going to pay $20 more, you're kind of on your own there when it comes to what the stop's going to be. For me, the stop on Tesla is 275. I'm going to make $10 on that trade no matter what. Why do I choose 275? Because the stop on that trade is the low of the tail of the day yesterday. If it takes out the low of that tail, I'm going to book my gain from buying it, at 7:30, 8 o'clock at night. I'm going to book my gain and look for another entry point. If it skyrockets from here, I'm going to be on it. So I'll be booking a $10 gain. You're going to be booking a $10 loss if you use my stop. So stops only work if they're married to the correct entry point. So that's step number one. Let's make sure we all understand that. If your entry point is different than mine, you can't use my stop. It wouldn't make sense. You also can't just arbitrarily use stops. They have to be married to the correct entry point. Otherwise, they're not going to save you at all. So now let's go over how to buy stocks correctly when you're using my information or any other information out there. This is true for any information that puts a stock at the top of your mind and you say, okay, now I want to buy it. What are the 2 locations you should be using? There's only 2 locations, in my opinion, that you should be using to buy any stock. And we're going to go over it right now. Let's use Gilead as the example. Okay, let's use Gilead as the example. Earnings announcement last night, stocks up even more. Okay, we're just killing it in Gilead. We're just making a fortune here, picking up a 4.5% yield. This is in the Armor Invest portfolio. Okay, but I want to share this with you because there's two key locations to own Gilead. The first is in the gray box. In the gray box before it breaks the downtrend. If you decide you want to put capital to work in a tight base, the stop would be a new low. So one of my favorite ways to put money is to put a position on as close to the stop as possible. Tight to a base. As an example, we did this in OIH. OIH hadn't given a buy trigger yet because that would happen here after a blowout, right? But what we wanted to do is put it on in the first location. Here's a double bottom on energy stocks, like service companies. Right here is location 1. That's where we bought it, okay? So there's two locations. One inside of a tight base with a very tight stop. The benefit of buying in a tight base is that your stop is tiny. Makes a new low, you're out. Very small loss. Blows out because you're right on your investment choice and you're already in making a lot of money. That's location number 1. That's what happened to us in service stocks. In the case of Gilead, I did not buy the first location with you guys. And the reason for that was it was making lower lows, and I don't like to buy lower lows. See, look at OIH. This was a higher low, and so it's making a bottoming wedge, and I'm willing to put it on more anxious, right? So the sellers are in control as the price goes down. Don't forget, we're looking at price charts. All they're doing is telling you there's a battle between buyers and sellers, right? And so OIH is getting crushed. The sellers are in control. It bounces. It comes back down. The sellers are hitting it again. And then the army of buyers comes in and pays a higher price. That I love. That tells me something's cooking. So I'm willing to buy it down here. In Gilead, I'm not willing to buy it here in the gray box because it's making lower lows. The sellers are still in control. Then it blew out of the downtrend. That was a piece of news that came out on a drug of theirs was positive. So the buyers were able to run through the selling army. And the rout began. The selling rout began. And the buying army was winning. So we don't buy the big gap up. We don't buy the rip based on a piece of news. We don't buy that rip. It goes on our whiteboard. And we wait for the test of the rip. And if the test holds and the buyers come in higher, then we get on it. That's number 2. That's where we were buying Gilead. Let's look at a couple more examples of that. Here's Altria. There was 2 locations in Altria. We actually bought location 1. It blew out. But if you missed location 1, and now I'm talking to you Armor Report subscribers who might miss an entry point, location 1, you do not chase it. You do not chase it. If you want to get location 1, you got to be an Armor Insider. You're on the desk with us all day. You get that trade. If you're a day late, it's okay. It's okay. Armor Report subscribers, it's okay. Put it on your whiteboard. Wait for the test and buy location 2. Altria blew out, pulled back, made a higher low. There's location 2. You're going to make as much money on Altria as on location 2 as you would have made on location 1. That happens a lot of the time. Bristol Myers blew out of the downtrend, pulled back, buying it here. We didn't buy it down here. Location 1 was down here. I didn't buy it. Blew out. I waited. I bought it here. We're making money. That's just an example for you. I'm just sharing a couple of examples of how to put money to work correctly. So what do I do on OIH? If you missed OIH, you're not buying it yesterday, up 9%. You're waiting for location number 2. At some point in here, it's going to pull back, test, hold, start to move again. That's location 2. That's where so what am I doing with my energy positions? I'm holding these positions. I may even book a profit in the producers. And as it consolidates, when location 2 pops out a couple days from now, a couple weeks from now, that's when I'll start buying individual stocks in the energy space. Because then we'll see there's a follow through. It won't be just a one-day wonder. It'll be real institutional money coming into the space. And now it's time for me to own more energy stocks. This is the correct way to put capital to work. If you do it this way every time, buying close to a stop at these 2 locations, you'll get rid of a whole bunch of terrible decisions you're making that are eating away at the profits of the good decisions you're making. You know what I'm talking about. Those momentum chasing decisions. You just can't help it. You got to chase it. Get rid of that emotion. Identify these locations. Use a whiteboard. When there's the emotion, put it on the whiteboard. Wait for the next opportunity. Those are my thoughts for you today. I hope you. And everybody, remember, at the end of the day, whatever I'm talking about, whatever you're hearing everywhere else, find a quiet space, figure out your strategy, your risk tolerance, your goal, what you're trying to do with the portfolio, and be the smart money. Have a good day, trader.